Yes, welcome everybody. I'll just wait like 3 to probably 5 minutes in order for everybody to get there. Yes, so we can start, I think so. So welcome. On schedule today is basically to discuss the RSI as the theoretical part. Then we'll check the screen the market for the forex foreign exchange market, and then also the stock market, and then just technical analysis of basically what could be good trades and so on, and what trades I have done recently and why I've done them and why I basically left some of them and so on. So on the screen here is basically what I have when I trade. These are all the indicators that I use. So up here in the corner, this is the Bollinger Band, this is the stochastic, this is the CCI, and this is the RSI, MACD, and then I have the moving averages and also candlesticks for the price action. So the last 2 Fridays I've been discussing the moving averages. Then last Friday I took the MACD, and now I'm going to explain basically what the RSI is and how you basically can use it when you trade. So the RSI is a momentum indicator. It also shows you when stocks or instruments of any sort are oversold or overbought. So if I zoom in, you can see that we have 100 here and then we have 0 down here. So the estimate for when something is very bullish, first of all, you have this line going upwards or in a positive slope, or you have it going down in a negative slope. And when this number here gets above 70, then it becomes a very bullish sign. When it goes below 30, then it becomes a very bearish sign. But the slope of this line indicates whether or not we are in an uptrend or whether or not we are in a downtrend. So you can look at previous price action. If you go back here, this is just a completely random stock that I pick. So you can see that this stock fell quite aggressively here, and you can also see that we have the same movement in the RSI. So when you look at the RSI, if it goes below 30, then it is significantly oversold. And things that are significantly oversold, they are often also sold in panic decisions, or in the other opposite direction, they can also be overbought. So people are just rushing in to buy and don't check basically what the price is, if it's a good price or not. So those conditions is where you're supposed to go in this case, buy, because we are oversold, and the probability of this going up is very high. So we got all the way down to 3.8, and when you're at 3.8, it basically can go to the upside at any point. It is almost 100%. It's never 100%, but it's nearly 100% that this stock will change direction and go back to resistant. So on the opposite side is, for example, when you get above 70. So 70 is the level where instruments become overbought. So for example, here we got up to 89.87, and that's a very clear sign that this is significantly overbought, and it will basically fall to the downside. So you can see it also in the MACD. You can see it hitting major resistant areas. You can also see it in the Bollinger Band, that we get way outside of the Bollinger Band when it gets significantly oversold or overbought. You can look at, for example, this period here when we were there. It is the same period where we go to the bottom here of the price action. MACD is very low, and also where we bottom here at roughly 3.8. So you can also see that we get way outside of the Bollinger Band right in that area. And after that, when we hit 3.8, it rallies all the way up to this area here, and a rally of roughly 39%. So the RSI together with the MACD is a really, really powerful tool. It is most of the time I don't look at the line. That is not that important. The only number I look at is basically this number here. So if this number is below 30, then I know that the probability of an instrument rallying, it is very high. If this number is about 70, then it's a very high probability that it will be selling off. So you can use this in order to determine when to enter a market for a buy. You can also use this number in order to determine when you're supposed to sell. So things that go up, for example, Bitcoin and most of the cryptocurrency, they go up to 90, 95. That is almost certainty that it will fall. So for example, the last rally we had a Bitcoin when it went up to 42,000, it went up to roughly 95 in the RSI. And after that, it fell roughly 25%. So, but you can also use this in order to determine when to leave a trade. So if you were buying down here, you can also use this number here in order to determine, okay, when are we going to run into major resistance? And the closer that you get to 70, so the closer that you get to 70 here, the bigger the warning sign should be that this will now start to turn around. So it's a very helpful tool also to determine when to leave a trade if you have been buying, and also if you have been selling. For example, if you were up here when it was right there, when it was at 94, and it was falling again towards 30, then it's basically an indication, okay, I need to get out of the market now, otherwise it will be turning around and I'll basically lose my gains. So that is basically what the RSI is. Yes, so we can go and look at the market. So over here we have the foreign exchange, and there's a lot of action at the moment because the US dollar has been rallying quite significantly the last few days, and today it seems like it has basically slowed down and is starting to decline or depreciate. So one of the main reasons for that is because it is running into major resistance in the weekly chart. It's running basically into the 20 moving average in the weekly chart, and last time it did that, it basically collapsed to the downside. So we'll see whether or not it will do the same. At least it is highly expected for the US dollar to pull back at this point. So we entered a trade for the euro US dollar, and we can look at this trade right now. This is not the... That was not the US dollar. Sorry, something completely wrong with my system here. Okay, I need to check something here because this is definitely not right, and probably because I have not scrolled it all the way here. Sorry, that's why it's not right. Yes, so sorry about that. So we entered a euro US dollar this morning, and the reason for that is because we ran into major resistance here last night. So we were hit the 150 moving average, and it then bounced from the 150 moving average. So we can look at, for example, the RSI for the euro, and we can see that it is 33. So it was at 30 when I entered this, or where we basically hit the bottom here yesterday. And since then, we have been rallying, and we were up 0.24%. We were up roughly 37 pips from this morning. So it is going to the it is starting to rally. Main reason, it is on the edge of being oversold. We have been quite significantly oversold for quite a long time. You can just see from the 20 exponential moving average all the way down to the 150 moving average, it has been selling off. And this is mainly due to the US dollar appreciating. So at this moment, we are expecting a pullback or a rally. So I've set two parameters here. First of all, the stop loss. The reason why I set the stop loss here is because if we were to break below the 150, then that is a very very likely that will go down to the 200 moving average. So instead of basically getting way into red territory, the stop loss is here to minimize the risk. So if this trade were to go sideways, the stop loss will basically kick in. Yes, you would make a loss, but it's much less if it were to fall to the 200 moving average and even below this. So the whole idea with a stop loss is basically to minimize your risk and to minimize your losses. So you will make a loss, but it'll be much less than if it basically fell below this and even much lower, and then you can basically get stuck. So it's always better to put a stop loss there. It's very irritating to lose that money, but it is technically the right way to trade, because you can make one bad trade and then you make 10 good trades. That basically means you have 9 good trades, and that's basically the way you earn money in trading. You will never get all the trades right. But at this moment, I think that this is looking really nice, because we have found major support here. We are on the edge of being oversold. We are way overstretched here in the Bollinger Band. And in worst case scenario, this should go towards the middle of the Bollinger Band. So roughly up 1% or 130 pips. So that could be a case. We could basically see this turn around when we go to the 20 exponential moving average or the middle of the Bollinger Band and then turn back. But even that, a 1% increase in this currency pair is a fairly good trade. If we were to go all the way to the top, which I've set as the take profit, that's a trade of roughly 3% to the upside, or 368 pips. So this thing should be a fairly good trade, but we'll see. Stochastic, for example, here in the 4-hour chart is also looking very bullish. So we will see a run to the upside probably the next 2 or 3 days, and then we'll see whether or not this will go further. So there are 3 other currency pairs that I've been looking at. The other one is the US Swedish franc. So we can see it right here. Can get rid of this and this. So this has also been rallying due to the US dollar appreciating. And today we have found major resistance here, starting falling down. And the reason why I think this is probably a good trade, not yet, but could be, is because we are significantly overbought here in the RSI. It is at 75, so way above 70. We are significantly outside of the Bollinger Band here, and in the 4-hour chart for the stochastic, it is dropping significantly. It's dropping very rapidly. So I usually use the 4-hour chart in the stochastic. I use the 1 hour and the 4-hour. 4-hour technically shows you what will happen in the next 4 hours and where this will go today. It's more accurate to be very honest. So CCI is turning around, MACD is not turning around yet, but if we manage to break below the 150 and start trending downwards, then it's very likely that we'll fall towards at least the bottom of the bullet at the middle of the Bollinger Band. So that is at the 40 exponential. That's a drop of 114 pips or 1.26% to the downside. So this is a currency pair I'm looking at, but we need additional red candlestick here in order to determine that we are basically going to turn around. Otherwise, we could rally up towards the 200 moving average before dropping. So the next one is, third one is basically the US dollar Swedish crown. And also here, we have been rallying from the bottom here all the way up to the 100 moving average, a rally roughly 4.34%. And yes, this is a massive rally. So it has run into major resistance here at the 100 moving average. It is on the edge of being overbought. It was overbought. It was at 70 when it started breaking down. It was also outside of the Bollinger Band, and the last time we were outside of Bollinger Band, it basically dropped towards the middle of the Bollinger Band, is right here. That's a drop of roughly 1.9% to the downside. So I'm looking at a similar move here. It is probably late to enter this, but there potential for this breaking the 50 moving average and dropping back to these low levels, that is fairly high. So Swedish krona is a fairly weak currency, and the US dollar is fairly weak at this point. So it is very likely that it will continue to depreciate. So the last one is the Euro Turkish lira. So I don't think this is not available in eToro, but if you have any other means of trading this, then this is a very good opportunity to enter this. Probably to enter this, to be very honest. So it has been dropping very rapidly all the way from here to where we are at the moment. That's a drop of 13%. So at this point, we're just above the 300 moving average. So if it bounces off the 300 moving average, which is very likely at this point. So my idea here is to enter at the 300 moving average and to target the middle of the Bollinger Band. And that's a gain of roughly 6%. So the reason for me entering this market, if it turns around, is because the RSI here is at 13. That is a very, very low RSI. We're significantly outside of the Bollinger Band. We have just been dropping, and at some point this will turn around, and there's where you can take advantage of it. And my idea for this is that it will turn around here at the 300 moving average. So we'll basically hit the 300, you get a green candlestick on the other side, and that is basically the sign that will go towards the middle of the Bollinger Band, roughly a gain of 6.33%. So a fairly good trade. There are other currency pairs. They are kind of depending on whether or not the US dollar continues to appreciate or depreciate. I think it will depreciate some in the next few days because it has been rallying so much, and also because it's running into major resistance. So we can look at the stock market, at the possible stocks to trade. So people that haven't been on this channel before, I do analysis of stocks as well with the scans that are available, and the scans, they are made to focus on stocks that are way overstretched, either to the upside or to the downside. So on this platform, you can make your own scans. You can program them or set them up as you want, and they're also pre-scans. So the scan that I've made is a scan that basically focuses on the Bollinger Band, whether or not a stock is outside of the Bollinger Band or on the downside, or outside of the Bollinger Band to the upside. And the advantages by seeing that is, first of all, there are 5,000 stocks available on the US stock exchange. If you have to look through them all, for example, you would use probably a week. And then if you scan it, you'll probably get to 10 to 25 stocks or something like that on a good day. So at this point, I have scanned for stocks in the Nasdaq. We'll basically look at the S&P 500 instead. There are 9 stocks in total that fit this criteria. And all of the thing with all of these stocks is that they are outside of the bottom of the Bollinger Band. They're basically oversold at this point. Because we have been rallying for the last few days, it should not be a lot of stocks that are at the bottom. But you can take advantage of that because they will most likely have a very low RSI and they are oversold, and therefore you can start buying them. So the first one is WST. I usually don't look at the companies. I don't really care what the companies do. I just look at the performance of the stock and whether or not it is, what way it is performing. You can go to the upside or you can go to the downside. Whether or not you produce a phone or a wheel or a car doesn't really matter. It is basically the price action of that current instrument that is interesting, and whether or not it falls into these criteria of these technical indicators. So the first one, it is outside of the Bollinger Band, not significantly outside, and you can see the RSI is above 30. So this is technically not a stock that I would look at. It is not very interesting whatsoever. It could basically fall all the way down to the 50 before it goes higher. So you just look at the next one. So this one is also not very interesting. You could make the case that we hit significant resistance support here and then rallied, but still there's not a whole lot of gain, and you could probably put a low position on this, but we're still very high here in the RSI. Technical indicators are not favorable to a rally at this point. Even in the 4-hour chart in the stochastic, it's still going down. So we may see this go even further. So you can look at this, and this looks much, much more promising. So this is definitely a stock that you should look at the beginning of the trade. So there are 2 things that can happen in this stock. Either it can rally to the middle of the Bollinger Band, or it can rally all the way up to the top of the Bollinger Band in the next week or 2. So this is NEM, Newmont Corporations. If you look at the RSI, it's at 24 here in the RSI. It is significantly oversold. You can see here in the Bollinger Band, we are way outside of the Bollinger Band and we are rallying up from that. That's a good sign. And we have touched the 300 moving average. The last time this touched the 300 moving average was basically over here. This was a major sell-off of the coronavirus back in March. And since when we basically bottomed here at $33, it rallied all the way up to $69. So a gain of roughly 150%. and 10% in, well, in 2 months time. So if you were buying it down here, you made a whole lot of money. But we have dropped all the way down to the 300 moving average and pulled back quite aggressively. So if you look at stochastic, it is not really ready yet to turn around. If we get a green candlestick here and you see the stochastic turning around to the red line here, that is basically your sign of entry. And where you could enter and where you should put your stop loss is right somewhere underneath here. So not too far away from the 300 moving average, because it could fall further. It's not very likely due to the RSI, but it is possible. Probably the main reason why it fell below the 300 moving average here is because people were panicking. So panic selling can basically make these markets go much lower than they should have gone, and people were basically panic selling here. So stop loss right here, and you could have two targets. You can have the target of the middle of the Bollinger Band, which is roughly at this price level here, so it's 61, and you can go also for the more optimistic, and that is right here at the top of these previous highs. So this is a trade of roughly, yes, this is a trade right here. So the first one is a trade of roughly 7%, fairly good trade. And the next one is a trade of roughly 11.3%, or even more than that. So yes, around 11.3%. So this is low risk due to the fact that we are oversold, overstretched, and running into major resistance here in the RS in the 300 moving average, and there's a lot of room to the upside. It could stay here for a while. If it stays here for 3 days and does not move to the lower than this, and that is an even better indication that we will go significantly higher. So I'll definitely put a sign on this that this should be a stock to look after. So next one is ALB. So this is not looking very interesting. Yeah, kind of. We could make the case that we are oversold here. We are overstretched here in the Bollinger Band, and we are trading underneath the 50 moving average. And this is what I don't like. If we were trading above the 50 moving average and the 50 moving average was acting as support, then it will be much more likely that we will rally from here. But because we're trading underneath the 50, it will act as resistant, and we could fall even further down to the 100 moving average. So I would stay away from this. So number 5 of 9, this is also looking fairly promising. So the RSI is not that low in this stock. So this is CTSH, and we can see here in the Bollinger Band, it is significantly outside. So it could rally towards the middle of the Bollinger Band, and that is a trade of roughly 7.4%. It has found major support here at the 150 moving average. The 100 moving average is working as resistant as well. So this is support, this is resistant, and we could actually stay within this area for some time. So you could basically put this on the list of a possible buy, but it could stay here for quite some time before it rallies, or it could stay for some time here before it falls even further. So you can look at number 6 on this list. This is not looking very promising. Then we have this one, which is looking much more promising. So if you saw the stock yesterday and could buy it right here, then you would have made an amazing deal. However, we are right here at the 300 moving average. This is APD. It is significantly oversold at this point. 27 in the RSI. Stochastic here, now the Bollinger Band here, we are way outside of the Bollinger Band. We're all the way down here and then rallied a little bit, but still outside. And we are finding support at the 300 moving average. So there are two possible trades here. You can trade it towards the middle of the Bollinger Band. That is roughly there. That's a gain of 7.7%. Or you can target the very highs here, and that is a trade of 14.12%. So in this case, you would need a fairly high, you can say, stop loss. I would still put it roughly around here at 2.50, give or take, around this area here, 2.50, and then you would target around this area here, which is the middle of the Bollinger Band, and then you would target these previous highs, which is the next one here. So this is the first target, this is the next target, and this should be your stop loss, not far away from where you entered. So this could also stay here for some time. Reason for that is because the stochastic is still in the 4-hour chart very bearish, and so are all the other indicators. So pay attention to this. This could stay here for some time, and then it could rally up towards these levels. So number 8 on this list is not looking very promising. We're kind of way outside here, Bollinger Band, but yeah, it is possible, but we're still trading underneath the 100 moving average, and that is kind of the problem I'm having with this. So last one is QCOM, and also this is not a very good trade at this point. So we made a scan of the S&P 500 for those that are significantly oversold, and out of all of those 500 companies, there is technically one that is very, very likely that it will rally from here and head towards the middle of the Bollinger Band or at the top. So instead of focusing on all 500 in order to buy something, this is easily to find just one by doing this scan. So we could also do the scan for the opposite. So we can do the scan for when it is overbought. So we have our conditions. My pre-built in here is where did I put it? Up, top. So you can see because we have rallied significantly the last few days, we have 29 companies that are at this moment overstretched, overbought, and are very likely to fall. And this also goes into my considerations when I do my technical analysis for indices, because if there are that many companies, especially the big companies, the Apples and Microsofts are falling, then they will basically affect the indice significantly. So we can look at this. You can see that this is way outside of the Bollinger Band here, but we are not overbought yet, and we are still rallying. So we could stay here for 1 or 3 days in order before this basically falls. So no. Then we have PayPal. It is on the edge of being overbought. We are way outside of the Bollinger Band, and I don't think that we're going to drop significantly in PayPal yet. It'll probably take 1 or 2 days before we see this drop to the downside. Give me a sec. Then we have SNA, and no, still not very promising. So this is ABC, still not there. And this one is more. So this is EBAY. So this is eBay. Yes. So this is basically has most of those characteristics of a stock that is very overstretched, on the edge of being overbought. We're at 69 here in the RSI, and you can see that the stock has jumped and then rallied significantly. So at this point, you could start selling this. I'm not a fan of selling things that are in an uptrend, but when things are this overstretched, I did a trade of one of these kinds yesterday, which basically was Google. When that occurs, then you could try and sell it towards the middle of the Bollinger Band. So for example, here it went from the top, and the middle of the Bollinger Band is roughly here. And that's a drop of 12.7%. So technically a massive drop, and also a fairly good trade. You can look at, for example, our trade in Google, which is here. So this is the trade that I did. I put in the stop loss right here, which was above the previous rally in order to, because I knew that is as far as it went there. Then I put the stop loss right here, which is basically the middle of the Bollinger Band. You could basically put it even lower than that. And the reason for this is because the RSI is significantly overbought still. We are way outside of the Bollinger Band. And you can see here the stochastic in the 4-hour chart, it is turning around. So when it crosses the green line here, it will drop all the way down to the red line. And at that point, it will probably take a few days, but we will most likely get towards 1900. That is where I think this is heading to. And if we manage to go down to 1900, which is roughly there, that's a trade of 8.12%. And yes, that should be a very good trade. It is up a little bit in pre-market, but I am expecting it to fall to the downside. So we're going to have a look at other ones. We had this one here, ABC Corp, eBay. Yes, and we have this one. So this is MGM. So yes, this could also be a possible trade. So we are outside here of the Bollinger Band. We could expect this to drop towards the middle of the Bollinger Band, and that's a drop of 4.4%. We are still not overbought here. We're at 59, so it is still has a lot of room to the upside. But if it gets a red candlestick right here, and that could mean that we are going to go lower. But still, this is a fairly risky trade because it's not that overstretched and it is not overbought yet. So we can look at this one. This one is CB, not very good. Then we have this one, still not very good. And this one is either very good. And this is starting to look much, much, much better. So this is Twitter. So Twitter fell towards $44 a share, and then it has rallied roughly 25%. Yes. Why? I have no idea, to be fairly honest. I don't see why this company has so much value. It probably because it is in news all the time. That is basically what is driving this. But there are several other platforms out there that are technically doing exactly the same as Twitter, but because politicians and people put out tweets, yeah, that's probably the reason why people are buying into this. But this is most likely a stock that is going to drop at this point. Reason for that, it is that we are at 79 here in the RSI. We are way outside of the Bollinger Band here. So we are also testing the previous highs over here. So we're at the same top. So at this point, it is very likely that this will drop all the way down to the middle of the Bollinger Band, and that is roughly around this area here. So around that area, or a little bit lower than that. So here. So a drop of $6, give or take, around 50. That is most likely where this is going. So that is a drop of around this point, around 10%. That is most likely where this is going. So we could even drop further than that. That is even not close to that. So 11.67%. That is most likely where Twitter will drop before it goes higher. So you should pay attention to, for example, stochastic. It is still above the green line here, and therefore it is still bullish. It could mean that we have an additional day to the upside, and then people will start selling. But this will definitely be a stock that I will be looking at. I will put a mark here because it is a trade of roughly 11%, and it basically clicks all the categories for a stock that is overbought and overstretched. So for here in the bullish band, way outside, significantly overbought here in the RSI. Therefore, it should be dropping in the next few days. So we can see this one. Nope, it's not good. That is this one. Neither that one. And neither is this one. But this one is. So we can take this one as probably the last one here. And this is DXCM. And the reason why I say this is a good one is because the RSI is above 70. We're outside of the Bollinger Band, and therefore it's very likely that we'll fall towards at least the middle of the Bollinger Band or the bottom. We have an example here, what happened when we went outside. So this is back in, what was this? Back in January, 8th of January. It went outside of the Bollinger Band and it dropped all the way to the bottom. So the trade of roughly 9.34%. And at this point, if we were to do the same, if we fell all the way down to the bottom, it's a drop of roughly 15%. So it has major support here at the 50-moving average. We can see it touches there, it touches here, and also back here. So it could drop from this level here to the 50-moving average. So give or take 11-12% drop. So in this case, I would put a stop loss right up above here. I would target the 50-moving average or the middle of the Bollinger Band, which is roughly, give or take, here. That would be my first target. This would be this drop here. So it could also go further towards the 50, but this would also be a fairly good trade. So you can see if we have another one here. No, and this one. So this is WDC, Western Digital Corp. And also here, we're at 77 in the RSI. The Bollinger Band, we are way outside. We have been for several days. So it is kind of about time for this to drop towards the middle, which is a drop of 9%, or the bottom of the Bollinger Band, which is a drop of 19.5%. That is stretching it. I would guess it will drop towards the middle here, a roughly 10% drop. So give or take. So you have any questions? Is there any stock that I should look at? So just keep in mind, this is the US stock exchange that I'm looking at. It doesn't have the European stocks, and that is also just fine for me because there are 5,000 stocks and indices. Just 5,000 stocks that are listed there. eToro has all the other ones. Yes, as you can see, the US dollar is falling off a cliff at the moment. I would like to start selling WL. Yes, I can look at that. I don't think this is the right stock. Can look here on. Yes, I have it here on Ether. I can go over to that platform. So here, or it's that platform. To be fair, honest, I don't have any technical indicator for this stock. You can look, for example, probably in the Bollinger Band. It will probably show up there, if that is possible. No, there is. I have a weekly chart here. 40. So yes, that helped. So yes, this is also a stock that is significantly over. It is significantly overbought. So we went all the way up to 14.43, way outside of the Bollinger Band here, and you can see that the RSI is at 84 at this current stage. So yes, this is also taking the same characteristics. I would technically wait for the opening, whether or not it has a candlestick that is underneath this candlestick. But this does look like a very bearish candlestick. But a drop below here, that will basically opens the door to roughly $10. It should drop to around $10 or something like that. You can also look at the Fibonacci Retracements here and see where this will go. So you can see that the 50 is right here at the 20 exponential. The 11.27 should be significant support as well. So target price of 11.27, that should be a fairly good, fairly accurate target price. But the problem is that there's not a lot of data on that stock. At least on Ether, there's not a lot of data on that stock. So I don't know this company, but just looking at it, it is just for RSI and for it is quite well overstretched, to be very honest. Anything else? Yes, as I was beginning to say, the US dollar is down over 30% today, and that is also what I expected it to happen, because it was running into major resistance at the 20 moving average in the bullish band, the weekly chart. So whether or not that holds for next week as well, if it does, then we could see it fall back towards 89. So we'll see. But if you don't have any questions, I'll end this here. Otherwise, you can just write to me on Patreon. I'll try to answer you as well as I can. So good luck and good weekend.